All right. So let's say that this is where we are right now. In this instance, let's identify the most recent trend. Where are we going? Are we going up or are we going down? Which one does it look like? What's the trend? Right, so we have some conflict here. We were previously going down, but now we're going up. So what we're going to do is we're just going to say, for the sake of argument and sake of time, we can see that now we're going up. We were going down, but let's, there's a key point here. Trend line, it was broken all the way over here, right? Order blocks have already been mitigated. So that tells us if we were going down, well, the only other area for us to sell from would be a little higher. So let's think about the buys, right? So for the buys, everyone draw the trend line for the buys exactly as it should appear. So with that being said, if that is the trend line, as you guys have now all identified, mushrooms. If that's the trend line right here, where is the order block? Where is the order block if this is the trend line? Remember the setups we talked about, right? Remember the setups. Remember, if there's no imbalance, there's no order block too. Here as drawings, right? So if we're thinking about it in terms of pushes, right? We have one low, pull back, two lows, pull back, 3, 4. This is where price currently is. Where's the first thing, the first place we should always look to buy based off trend line liquidity? We should always expect this first low to be broken, right? Again, if there's no imbalance, there's no trend line, so or there's no order block, so I wouldn't emphasize it. Here, we always need to expect the first low to be broken. Is there an order block to the left that remains unmitigated? Yes, there is one right here. So this would be our first order block, right? The next one would be where? Well, this, we have 1, 2, 3. We want to identify the order block that actually started, right, this first push. Where's the imbalance? There's no imbalance. There's no imbalance. No imbalance. Boom. We do have a small imbalance here. So this pink box is then our next order block. So price will either do this or it'll come down here, then go higher. Only one or the other. One of the two things. Systematic approach. If it's this, do not look here. If it's here, look there, right? It's either taking out the first touch or the last touch. Of course, you can see here, mitigated, price then runs away, right? And that's all that you would anticipate. Very straightforward. Let me anticipate this, just trying to get all this ready. All right, so now what I want you guys to do is the exact same on this, and then we're going to keep flying through. Identify the trend in this scenario. After identify the trend, draw the trend line as it appears for touches. Boom, 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 right? We have several different trend lines in this case. So our trend line, right? Let's say that, thank you. I'm going to go, let's keep, now it's wrong, Mrs. Stoppa, right? But this is our trend line right here, right? Price already broke the trend line, but there's still an anticipated move that we're looking for. So based off of those trend line setups we talked about, where are we going to be looking to sell? Where's our order block? Because if you see, there's a lot of different ones. You're going to have to use the process of elimination and in conjunction with the specific setups we look for. So let's see, we have a high, we have a low, first touch. We have our high, low, second touch here. So we know that this is where price must come back to at the minimum. at the maximum, right, it's either going to take out the first touch or it's going to come all the way up here. So someone who had illustrated 1 and 2 is absolutely correct. Nothing in here is valid, right? Nothing in there is going to be valid. So we need to look for the order blocks. Nothing above here. This is all equal high, break and retest liquidity, correct? Correct. So now where are the order blocks? Where's the first order block that's above here, right? Well, we have a couple different ones. Do we choose this one? Do we choose this one? Do we choose this one? In this case, they're tying in more types of liquidity, right? We can be able to think about it. But we know we have some form of order block in here. We're going to have something over here. So let's see what price does. Here's our trend line. The first order block right here after the trend line is taken out. Always the first one, right? And price after the fact will do exactly as we anticipate. Come up, take out all of these equal highs right over here. Take out all of these equal highs that are now formed into the immediate order block above, and then taking out the gas, looking to sell, taking out gas above our equal highs, our trend line, finding multiple types of liquidity, and then collecting the gas to then go to our destination as we already have so many equal lows. Very straightforward, but again, when you identify all these order blocks, it can get confusing. You should only ever have 2 order blocks at the absolute maximum. If you're saying order block, order block, order block, order block, order block, that's not SMC, that's gambling. That's not a logical approach. Or that's, I mean, yeah, that is SMC when you're doing so many order blocks, right? But this is how you need to start approaching it. Great. So now the last type of, or one of the last types of retail liquidity for today is going to be breakout traders, buy stops and sell stops. Why do traders use the breakouts? Breakouts, what is this, right? So those traders who are anticipating a high or a low to be broken, these are where sell stops and buy stops come into play. So if you are in a downtrend, right, if you're in a previous downtrend, you're going to be placing a sell stop below a low, right? So your low is where sell stop is going to be placed, because those who don't have the patience or those who don't know how to enter, they believe that when a low is broken, price is just going to do what? It's just going to keep continuing to go lower, lower, and lower. So their stop order is just a pending order that gets activated once price breaks a low, a sell stop. After this is stopped, it's the sell is then activated. So they're expecting this to happen, but in reality, they're getting in by the time it's way too late, right? Same thing for buys. If you're in a bullish market, where do buy stops occur? Those who expect new higher highs to be made, they don't want to wait. They're just going to place their buy stops right here, and they're going to expect price to continue, continue, and continue. We know now why it makes sense for this to be a retail strategy. So they just want to catch positions after, a high is broken, after a low is broken, so they can be in the trend, right? This occurs in all types of markets, but specifically those who are in trending markets. Again, they're looking at a base level just for new lower lows, new higher highs. That's all that they're looking for, right? So go ahead, draw out these 2 quick examples, and then type a 1 when you're done with that. Great. All right. Awesome. So keep moving forward. Again, this is basic day 1. This is not everything. just not to get your guys' hopes let down. This is just the baby steps, right? So let's keep going forward. So breakout traders, millions of retail traders want to catch the move. after it happened, and they're induced into seeing something on the wrong side of the market, right? So as we just talked about, you have buy stops and sell stops above and below every structural point. The purpose is to collect these buy stops and sell stops, and then reverse price to completely stop them out. So what happens is as soon as their buy stops, oh, here's my high that's broken and an uptrend, here's my order. They're going to get in, they're going to give you like, oh my God, yes, it's tagged in on you making money. And then what's going to happen? Price will then reverse against them completely and entirely. Those who are looking for sells when a low is broken, oh yes, my order's tapped, great, maybe put on some more, and then their move is just going to completely get stopped out. And their stops, again, their stop losses, but this is where they're getting activated, hoping it's going to go higher. Their stop loss is going to be back within the range, because if once the range is broken, they just want price to continue. Once it comes back in the range, once it comes back, you know, they want this to happen. Once it comes back in, right, their stop loss is just going to be right before their entry. So again, sells, as soon as a low is broken, their entry is activated. Their stop loss is just going to be a little bit inside of, right, the low, and then they're just going to get completely stopped out. So what do we focus on with this? We focus on thinking like a breakout trader and doing the opposite. Key note right here. If you think like a breakout trader and do the opposite, your whole perspective as a whole will start to slowly switch. Pretty drastic at that point, right? It'll start to drastically switch. So do the opposite of what breakout traders do. The expected outcome, price will trigger, then SL stop orders, it'll get triggered, it'll then stop out the orders and then completely reverse in the opposite direction. That's the ideal scenario, right? That's the ideal, is it'll take out a new low. Or what can happen is the second option is stop orders can get triggered, they'll get then stopped out, and then price will continue. That's the other scenario. So go ahead and draw both scenarios over here. One, and we have two. Give you guys another 10, 15 seconds and we will carry on. Almost out of break. We'll get a couple more slides. 15-minute break. Awesome. All right, we're gonna go ahead and continue. So at this moment in time, identify where breakout liquidity is lying. Where are buy stops and where are sell stops? Go ahead and identify them. Based on where price currently is, remember everybody, based on where price currently is, that's what we're forecasting. And remember, structural buy and sell stops. They occur at structure points. Right? You're always selling above, lower highs, higher highs, right? Got it. Boom. Awesome. All you guys identifying, great. Think about it. In this scenario, what are we looking for? Well, we identify the breakout liquidity. So the first place that we should be looking to sell, right, is we want to be selling above some form of breakout, right? So a breakout position here, we know here, once this high is broken, we have some traders who are looking for buys here, right? So we have a buy potentially above here. At that same token, like you guys have, we have below here, we have sells. Below here, high, low, we have sells. And above here, we have buy stops, right? So let's identify the order block for the black line, right? If that is the gas, what is the second thing that is needed for price to go anywhere? The second step, mind you, the order block, right? So let's see. Boom, we've identified our order blocks. Awesome, right? So now we've identified our order block. And now the last thing to do is figure out what the move is going to look like. So presumably, like you have taken out a buy stop into our order block that has imbalance, right? And then we're going to be targeting a new sell stop, right? A new sell stop, so on and so forth. So this is the exact move that we would anticipate. Price takes out the stop into our order block, and then price absolutely reverses into, right, another stop area. Key insight right here. for a very near future conversation. Now, the last one that we are going to be doing in this instance, everyone, first things first, identify the trend. What is the trend at this point in time? Bigger picture, what is the trend, right? You don't want to get caught up in the small. What's the bigger picture trend? We see all this from the left that we're looking for general buys, right? Great. Looking for general buys. Cool. Picasso, like it. After you identify the buys, now we want to identify the breakout liquidity. Where is the breakout? Where's the buy stop? Where's the sell stop we need to be taking out? Where's the breakout trader we need to collect to go higher? Great. So we know here that in order for us to go higher, we need to look to buy below where sell stops are, right? So here, there's our sell stops. You guys already have any order blocks. Awesome. So we know at this moment in time, range, we have below, we have our high. We're going to be taking out a low into our order block that is unmitigated and then coming to a new high. And this is how it's all working. Again, same about trend line liquidity. Further supports our confirmation, right? Further supports our buys. This order block over here has, again, not been mitigated, and then we're going to be continuing higher. There's so many factors as to why this is a very high probability trade, besides just what we're looking at. Again, later time and date for that. And that's just how it's going to end up working out, right? So on and so forth. Awesome, everybody. So now what we have is we have a 15-minute break. So 15 minutes. Let's be back here at 12:32 p.m. EST. 15 minutes starts now, everybody. So you guys can leave your screen, go eat, go to the bathroom, do whatever. Turn off your, prefer to leave on your screen, but if you need to leave, that's fine. And we'll be back here in 15 minutes on the dot. All right, so we have removing people. If you're removing people, that's okay. We're just going to get started. Send me a message when you're ready. So now that we just had our break, everyone, some of these things you guys might have already been aware of. Some things might be completely brand new, but I am here to say that this doesn't even scrape the surface of what is coming. We do not trade specifically this way. And I know that there's current members in here who definitely have forgotten or maybe not even used what we just went through because we focus on so many other things, not about this. This is not algo trading. Again, this is an algo boot camp, but algo trading starts tomorrow and then is on day 4. But we need to take the necessary steps to understand what algo trading actually is. And it's not equal highs, equal lows. It's not these different types of liquidity, but you need to understand the most important factors about what we just went through, liquidity, the basic strategies that fail, but more importantly are the purposes of why they do. And you're going to learn how we can use that to our own advantage exponentially more than just identifying the order block just under it. It's a whole process, understanding every move everywhere and the purpose of everything, purpose and intent. So now is going to be the very exciting block that's going to change a lot of your guys' perspective, as we somewhat previously just had at, is going to be about the revelation of inducements. That is now what we're going to be getting right into, understanding the psychological purpose, the analytical reason why you've always been on the wrong side of the market, and how to turn your biggest fears into your greatest strengths. Because as much as inducement is analytically and psychologically cumbersome, it uses your emotions and your money against you, which you're going to very well realize. And there's specific reasons at specific places, specific trends. You're always getting caught up in it. And if you use BOS or cute chalk, you're going to be learning not to do that, right? And if when you know exactly why it fails, then you're going to know how to apply it properly. But the whole goal is for you not even look at structure. But you have to be able to master structure before you know anything else, because structure is very heavily manipulated, right? So now what we're going to get into is, of course, another breakout room. So again, we're going to take 5 minutes maximum this time, get you guys warmed up, because then this is the last stretch of today, right? So we're going to end off today with the inducements, several examples, and then a whole A to Z approach on how to use inducements for some of your highest quality and stellar setups. So with that being said, I'm going now to break out you guys for 5 minutes. You guys will end up meeting everybody. I know current students, you guys know one another, but you're going to be knowing one another even better. So we're going to do breakout rooms. We're going to do this one last time, and let's do this. All right. I'm actually going to do recreate one more, another complete randomness. And I hope I'll do one more time. All right. And go ahead, guys, just answer all these questions and be back in, let's say, 4-5 minutes at an absolute maximum. So let's get right to it. Everyone, please join. Do not stay in this main chat. I'll call you back when you guys are ready. Ziggy, set a timer for 4 minutes. We're all ready. I think we are all ready to continue. All right, let's see. All right, perfect. Admins, please. Beautiful. Awesome, Angela. Cat attack, that's funny. Awesome, guys. Well, I hope these breakout sessions are better. I figured it'd be much more efficient to meet one another quick, because we previously would have all members introduce themselves to the community, but I know that takes some time. So hopefully that's a little bit better of an experience. That'll allow us to go through a lot quicker. Awesome. Love that. All right, perfect, guys. Let's get right into it. To head to second and the last blocks for today. So block 2, the revelations of inducement. In this section, you guys can expect to learn structure is not king. You're going to understand where all types of trades are losing, even more so than what we previously just talked about. That specific point where all of these types of strategies are the same conglomerate area where everyone's losing, and what is actually one of the most manipulated forms, the most manipulated form of liquidity that all strategies are built around, right? You're going to be learning the routine approach of the cyclical manipulation and all of the financial markets. You're going to be receiving the answers to your analytical and psychological losses. And this is the first step in introducing the algo. This is one of the pillars that you will be learning now. Time for the truth, everybody. Time for the truth. How many of you guys and girls have always thought structure was the way? Or if you've been marking your structure and still losing trades and still getting them wrong, right? Well, it's time for you to learn why now. When you learn the why, you will start to understand seemingly everything over time. They need you to lose. They need you to lose. We, me, you, all of us, we do not control the market, but we are participants in a much larger plan. And it's like chess. Those who are actually controlling the chessboard are, the composite operator. It is going to be those who are the market makers per se. And all we're just little pawns to their scheme of the market. You have the kings, the queens. Those are the big institutions. Those are, the true smart money, not smart money concepts, but smart money entities. And we're just irrelevant pawns that can only move one way or the other, not in all directions. So we're simply a part of their plan, and they need us to lose for anything to happen in the market. We're always going to be a byproduct. And with that being said, they're not out specifically to get us, but what happens is, let's say you had trillions and trillions of dollars, multi-billions of dollars. Would you not find a way to put more money in your pocket without having to do anything to do so? Meaning, these conglomerate of entities over the past several decades, they've spent multi-billions in order to preserve trillions. They've brainwashed the mass and general public to learning strategies that don't work, or if they do, a very small percentage of the time, because then that hooks you in realizing, wow, this can actually work. And then you take so many losses before you're profitable, and that 1 or 2 wins that you make, that's just going to keep you on the edge to then following those same strategies that don't work. So they brainwash you into learning these strategies that don't work. It's not a common fallacy that the reason why some of the top Forex education, the same websites come up, not by SEO, search engine optimization, but it's because it's paid to be put first. Not anything about smart money, nothing about anything what you're going to be learning, because they're teaching you strategies that will put more money into their pocket. And that's what the smart people who are who created chess, those are the ones who are doing. And that's the big money. The institutions, they have the capital to spend that money to brainwash you into learning things that don't work. So they know that you're going to lose. They need you to lose, but you're just going to be a little irrelevant piece of their puzzle, because the money that you're going to be losing is not going to be worth, a nickel or dime to them. Furthermore, the reason why we're always a byproduct of all movement that happens in the market, the reason that we are always getting trapped in the way is because these banks, institutions, funds, they have access to order books and liquidity providers where they can see every entry, every limit, every stop loss, stop order, pending order, take profit. They see it all. But it's something very important to emphasize is that when its common strategy is used over and over and over and over, and you see millions and just tens, hundreds of millions of orders that are all in the same places routinely over time, statistically, where are these people going to have their stop losses? What motivates people to be taking trades? What's going to factor in fear of failure or fear of not, doing well? What don't they want to have happen? And they have very sophisticated algorithms that understand exactly the points where not just one type of trader, but all types of traders do not want to lose and will not be focusing for price to go. All traders focus on their own confirmation bias, and how the algorithm and how the banks understand what's going on is everyone at some point will be using a similar same strategy. And every factor, whether it's structure, whether it's trend lines, they all rely on the same factors of stop losses. Where are those stop losses? All in the same places. So these entities need to manipulate price to collect the stop losses to continue. It's the necessary evil of the marketplace. It's what keeps the market in homeostasis. The market's not just vertical. It needs to go higher, lower, but there's always needs to be fuel and a reason for that to happen. And they're capitalizing on your money because your fear of losing or your greed is what's feeding into that repetitive decision that you're making to over risk, to jump into trades early. They know exactly everything that you're thinking. Anything that you've thought, I've thought, there's only so many things that you can think about when it comes to price and your emotions. It's not like you can't, there's not like new emotions to be felt after you've been doing this for a while. It's always the same, right? So with that being said, understanding everyone's stop losses in the market and where they are specifically losing is how we have to think. We have to flip the script. We have to go the unorthodox way. Before we know where to win, we need to know where everyone is losing, at least with a rule-based system. Obviously, if you're entering out of support and you have your stop loss 100 pips, you might get lucky a few times. Like myself, didn't have a stop loss. I endured pretty great drawdown before my trades would end up working out. So you can get lucky. But studying where stop losses are tells you where all the individual gas stations are of how price is going to get there. And if you remember from earlier today, I emphasized liquidity tells you three things. Liquidity tells you three things. One, where price has been. Two, where it is going. And three, how it's going to get there. And that's the roadmap, the analytical roadmap that we're trying to depict on any time frame, understanding the narrative. Because at the end of the day, we're detectives. We're story writers. We have to figure out what is going on in the market by understanding the back end, by understanding everyone's emotions, everyone's strategies. That's how you build a very sophisticated and cutting edge strategy, not by just choosing one thing and, oh, this works great. You can make money doing that. Granted, you're consistent and have a profitable win rate. Doesn't matter what you use at the end of the day. But that's not my goal. And I want to, educate you guys on how to understand not just a setup, but every move everywhere. Doesn't mean to take it, but that's what you're going to be learning throughout the duration of this boot camp is, again, the complexities of what you're about to learn now. And again, this has been on my own dime. Two and a half years ago, Why did I lose? Why did I make all those decisions that I made in order to lose everything that I had? Emotions, 100%. But even more importantly is I did not want to lose. I was just focusing on the wins. So if I had studied my losses more, I would have inevitably won more. See, in order to win more in the market or to win in the market, you don't need to win more. You just need to lose less. So by studying your losses, that'll enable you to learn and win more, right? All right, so that's going to be the blueprint for success. We are then the only entity with a rule-based approach that will have very, very high success in terms of win rate, but also accuracy, profitability. Your whole equity curve over time will become exponential. All right.